Hello traders, T2 is back with another episode. In this episode, what you are going to learn? Suspense. Okay, it's the biggest suspense. If you watch until the end, I believe that this suspense will give you more precision about your trading. If you are interested in, please don't forget to give me a thumbs up to support our channel. And if you are new, don't forget to subscribe. Okay, let's go about the chart and the trading. What is trading? Trading is not just an entry, it's a story reading, okay? The novel reading. You have to start the novel from very beginning. How this novel starts, the trading novel, how it starts. It starts with monthly analysis. So this is the first step, and the last step is your execute trade. It starts with monthly analysis, it ends with your entry. That entry can be a profitable entry or it can be a losing trade. Okay, it's different matter. But if you start this journey or to start read the novel like that way, trust me, it's gonna be very easy for you. Yesterday I told that market is going to stay into this Friday range. This is the low of the Friday, this is the high of the Friday, this is Monday price action. I told that market is going to stay inside this range. It stayed into that range. Okay. I told that market is going to leave that sell side liquidity for Wednesday. The reason is Wednesday we have CPI and FOMC. It left it like that way. I also told that market is going to end the day over here, exactly over here. It end the day over there. Then this is Tuesday, market started. I outlined whole thing over there. In my life, I told what is going to happen today. I told that market should take the Monday high and the Friday high. It has taken the Monday high and the Friday high. Yeah, it went too much. That doesn't matter. Until that area, I was absolutely right. After taking this buy side liquidity, where it will go, I don't care. After the monthly analysis, if you have done your weekly analysis, this thing is gonna be very easy for you. How to do the weekly analysis? Every single week, I'm making the weekly analysis video. Watch those videos, get some information from there, learn it to do it by yourself. Trust me, brother, it won't be worthless. You will be in a next level of trading. Until now, you are doing everything wrong because you are just looking for a setup. You are thinking that I will just buy or sell and then I'll be a millionaire or billionaire. No, man, it's not like that. It's it's a story where you have to start to read the price from monthly analysis until the end. That means your entry execution, trade execution. In this weekly analysis, I told that this week I'm expecting lower price. That means market will expand lower. If you find out where your weekly expansion will be, then this thing is gonna be very easy for you. Monday is the accumulation day. Tuesday is the manipulation day. This is the Tuesday price action. When I'm expecting the weekly candle will expand lower, then I will expect in Tuesday market will take at least the Monday high or the Friday high. If it is overzealous, it will take the Friday high. If it is not overzealous, it will just take the Monday high. Then it will expand lower. Until now, you have just listened to me. You have listened to me, the introduction. Now let's go into the price action. This is Tuesday price action for NQ. This is 15-minute chart. In the morning session, when market was over there after 9:30, market came here. What is that? That is new week opening gap. This new week opening gap, hold the price and then send it back until the Monday high. See, this is the Monday high. So it has taken the Monday high around the morning session. It didn't went lower. Did I expect any sell? No, I didn't expect any sell because market should not go lower. It should keep going higher. How do I know that? As I told you, you have to do your weekly analysis. I have done that in my YouTube channel. I have uploaded that video. If you have any confusion, you can watch that weekly analysis video. When this new week opening gap hold the price, send it back until that high, okay, that Friday high. Then what it left? Last fair value gap from 15-minute chart, entry fair value gap from 15-minute chart. What else it left? The high of Friday. That means that is my buy side liquidity. At the same time, this is the all-time high. This was the all-time high. So market has taken the all-time high as well. Market left that all-time high behind me and these two fair value gap. Then you can see market came here to this entry fair value gap. Then it was overzealous, reached until the last fair value gap. From 15-minute chart, market has taken the liquidity, this low and that low. They were relatively equal lows. Market has taken that relatively equal lows. How far this candle reached? Where did this candle came? Let me mark the order block here. The lowest down close body close candle is my order block. So over here, this is the order block. Price tapped to this order block, went higher. When it went higher, what it has done? It has given me a market structure shift. So if you just mark this high as a shifting market structure, it is also valid. I'm going to remove the Monday high. So that is your market structure shift. Where is your entry fair value gap? There is your entry fair value gap. Where is your breakaway gap? This is your breakaway gap. Market should not close below the consequent encroachment of the breakaway gap. Look where the body is closed. Above the consequent encroachment of the breakaway gap. Then went higher of the entry fair value gap one more time. Tapped to the entry fair value gap. Boom. Market went until that area. Where did it reach? Let me check. This is the low and this is the high. I'm going to try the standard deviation. From the standard deviation, you can see it reached until -2 standard deviation. At the same time, -1.5 standard deviation is really so precious, crucial for me. It tapped to this -1.5 standard deviation, used as a resistance, come back again to the -1 standard deviation, use that as a support, then expand higher until this -2 standard deviation. And now it is trading over there. It can reach until -2.5 or -3. Any level it can be traded. Why you have marked that body instead of the wick? If you want to mark the wick, let me just mark it. There is nothing wrong, because sometimes ICT marked the wick to wick and sometimes he marked body to body. Now, me personally, I got more precision when I marked body to body. That's why most of the time I marked the standard deviation from body to body. It's not my intention to explain the standard deviation over here. I just marked it to show you how it reached and where it has reached. Now, when market came here to this new week opening gap, there was a setup. At the morning session, I have outlined that setup in live. I execute my trade in live. Everything was in live. I read all this price action in live. This is the PM session which I am interested to explain. Now, keep that in your mind. This is your entry fair value gap from 15-minute chart and this is the last fair value gap from 15-minute chart. This is your buy side liquidity because this is the Friday high. If it is the manipulation day, it should take at least the Monday high, and after taking the Monday high, how it left that Friday high was suspicious to me, so I was expecting that market is going to take that Friday high as well. Now I will go to 1 minute chart. This is my 1 minute chart. Okay, this is the first time when market came here to this entry favorable gap from 15 minute chart. That was the high from Friday, which has taken over there. Market came here to this entry favorable gap, then it went higher. It went higher, a very nice displacement. At the same time, it has taken some liquidity over there. You see this low, that low, these lows, these two lows. It has taken all the liquidity and a market structure shift. This is the high which has been shifted over there. So this is the market structure shift. After shifting the market structure, this is your entry favorable gap. As I told, please take your buy from the entry favorable gap and cover the breakaway gap, at least the consequent cosmic. If the breakaway gap is small, then cover the whole breakaway gap. If the breakaway gap is huge, then just cover, just let me mark it as a breakaway gap, and let me remove the breakaway. If the breakaway gap is huge, then cover only the consequent cosmic. You took your buy over there because that was a very nice immediate reaction. You covered the breakaway gap. Maybe you have targeted these highs, okay, not the extreme one. Instead of that, you have targeted that high, these two highs, okay. Now what happened? Price went little higher, boom, you got stopped out. I was live until here, until that candle I was in live, and then I just texted that this entry is not valid. You should not take entry over there. Why I told that? Because this swing high is not valid for me for shifting market structure. Why this swing high is not valid? Now I am not going to explain that. If you are interested, please watch the market structure shift video from my study folder. If you don't find it, let me know to the comment box. I will give you the link that will clear you how to mark perfect swing high or swing low for shifting market structure. If you know how to mark the perfect swing high or swing low for shifting market structure, I promise you, brother, I challenge you, brother, you will easily avoid 1000 losing trade. You can easily avoid them, like this one. What happened then? Market went little higher, gave you another market structure shift over there. I'm going to remove this one because this is not valid. So over there, then you got another market structure shift over there. Is that valid? Yeah, it's valid market structure shift. Where is your favorable gap? Let me mark the favorable gap. There is your favorable gap. Okay. Is that an immediate reaction? 1, 2, 3. Within 3 candles, it has traded this favorable gap. So yeah, that's an immediate reaction. You will take your sell over there, cover maybe that high, and target maybe this relatively equal lows. See this relatively equal lows? You will target that relatively equal lows. Is that entry valid? Absolutely, this entry is valid. You can see the risk to reward ratio is near about 1:3. A very nice trade. Here is the part. You should not take this entry. As a beginner, if you go both buy and sell by depending on the setup only, then most of the time you will hurt yourself. The reason is you have to read the story. You are not looking for sell. From 15-minute chart, you know that market should take that buy side liquidity. So this whole run you will avoid. I know, guys, you are not gonna get this part. You are not willing to take this part. Instead of that, you would love to take that sell. If you keep doing that, if you don't read the price action from 15-minute chart, instead of that, if you just depend on this setup, this is just depending on the setup, you take buy or sell depending on the setup, most of the time you will hurt yourself, and you can't be a professional or the consistent profitable trader. So you have to avoid this trade. I'm here to teach you how the real trading is. Okay, I'm trying to teach you that. That's why I'm giving you the best advice. I simply can told you that I know that market is coming here to this entry fair value gap from 15-minute chart, so go for that sell setup. No, you should not do that, because market can easily come back again to the top or to the constant crossment of that entry fair value gap, then it can reverse again. You should not focus on sell. Instead of that, you should focus on buy only. This entry you are going to avoid. If you can listen to me in this specific area, I'm gonna promise you I will make you a consistent profitable trader within 6 months. If you keep coming to my live and if you keep taking the notes, the rules I am giving you every single day, the way I am showing you the precision, if you take the notes and use those information in your trading, you are going to be a profitable trader. I am gonna make you that. I promise you, brother. So this setup I'm going to remove. I simply could say that this is very nice setup, but it's not actually. Then market came here to this last fair value gap from 15-minute chart, right? Now look at the time. What time is it now? 11:50. So the lunch hour is going to start. All of this price action is inside the lunch hour. Should you take any entry around that area? No, you are going to avoid everything, every single thing over here. Lunch hour price action is not valid. This whole price action is not valid at all. So you should not take entry around that area. Instead of that, you will wait until 1 p.m. So this is the 1 p.m. candle. The PM session has started over there. Look what happened. So far you have seen that market has traded the 15-minute last fair value gap. Then it went higher. Finally, this is the PM session. Around the PM session, this is the 101 candle. What this candle happened, what it has done. First look over here. Market has taken the liquidity. This is the market structure shift. Price has traded the fair value gap. This is the last fair value gap from 1 minute chart. There is no other fair value gap, not even a single fair value gap below this fair value gap. You can watch over here. There is not even a single fair value gap over here below this fair value gap. So this is the last fair value gap. Price has traded that last fair value gap, went higher. Right? Absolutely right. When it went higher, where is your last down close body close candle? This is your last down close body close candle. Now, the opening of this last down close body close candle and the high of this last down close body close candle is your order block. If you are confused about the order block, don't worry, brother. I have already made a video to my YouTube channel about the order block, how to find a perfect order block and where you should look for the order block, when you are going to mark the lowest down close body close candle, and when you are going to mark the consecutive order block. I have explained every single thing over there. If you are really interested about the order block, please watch that video. I believe that it will help you to get more precision over there. Okay. So that's all. It has traded this order block. After trading this order block, boom, a very nice displacement. When I got this displacement in the PM session, it has already traded the 15-minute last fair value gap. It has taken a lot of liquidity, traded the order block, give me the market structure shift with a very nice displacement. Let me mark the market structure shift. This swing high is valid for shifting market structure. This swing high is valid for shifting market structure. And this swing high is also valid for shifting market structure. Every single high is valid for shifting market structure. As I have this one, I'm just gonna keep that on and I'm going to remove those market structure shift. Okay? So this is my market structure shift. After shifting the market structure, where is your entry fair value gap? There is your entry fair value gap. Where is your breakaway gap? this is going to be your breakaway gap. So I'm gonna mark the breakaway gap. So this is your breakaway gap. Where should you take your entry? You should wait until the breakaway gap? Absolutely not. Here, this entry fair value gap should be your entry. Here, where should you put your stop loss? It's better to put it below the breakaway gap. But as I told, this is a huge breakaway gap. Just compare the entry fair value gap with the breakaway gap. Can you see how big the breakaway gap is? Near about 12 handle gap. If you see this type of huge breakaway gap, just cover the constant crossment of that breakaway gap. Just one tick or two tick, just cover that one. So it's near about 19 handle, no worries. Where should you target? This high. That should be your target. Now, you can say, brother, market went too far. If you take more than one contract, you have to take the partial over there. At the same time, you can use your standard deviation for projecting how far it can reach. High, low, higher high. This is the down move. So you have to mark the lowest body and the highest body. Use that standard deviation. Target until minus 1.5 standard deviation, until that area, okay? You don't need to hold your trade for the minus 3 standard deviation. Where did it reach? Minus 3 standard deviation from 1 minute chart. From 15 minute chart, you saw that this was the minus 1.5 standard deviation from 15 minute chart. But from 1 minute chart, this is minus 3 standard deviation. You don't need to hold your trade until that. Trust me, this minus 1.5 standard deviation will provide you more profit than even you expect. It's near about 60 handle. Your risk to reward is 1:3 risk to reward. At the same time, you have to take the partial around there, above the Friday high. Okay, this is the Friday high, at the same time all-time high. Here is another rules. If you, I noticed that because previously I never had the all-time high, but I have seen that when market go above the all-time high, it go at least 5 handle above the all-time high. So the all-time high is near about 19,155. So that is 5 handle above the all-time high. You can take your partial over there around that area, and you can hold the rest until that minus 1.5 standard deviation, or you can just close your trade over there. Still, you are going to get 36 handle. Is that bad? And your risk to reward ratio is near about 1:2. Just near about 1:2. Is it bad? Absolutely not. It's not bad, brother. It's awesome. I would love to add something over here. What is that? Why market fall until this breakaway gap? You can see this was the setup, market structure shift, fair value gap, then market has traded that fair value gap, tapped to this order block, went higher. When it went higher, see this fair value gap, this is the only fair value gap that should be unfilled. This fair value gap should be unfilled. Let me mark it, that is should be unfilled fair value gap. Wanna see? Unfilled. What happened? This unfilled fair value gap has filled by body and by the wick. Okay, by either way, it has filled that perfectly. A perfect way. It has filled that unfilled area. What should you look for? Your breaker block. Now, for the breaker block, market went lower, higher, lower. Where is your highest up close body close candle? See this highest up close body close candle? I'm going to mark that highest up close body close candle. Here, I'm going to mark my breaker block. This breaker block entry provide me, I'm going to put it over there. It's provide me near about 95% winning rate. Where did it price came? To that exact breaker block. Are you confused how to mark the breaker block? I have already made the video in my YouTube channel, brother. I have already done everything. Just you have to spend some time over there. If you spend your time, you will learn this thing. It tapped to this breaker block, went higher. Now, I didn't take my entry over here. If you are with me in my Twitter, you have seen that I have already uploaded a live execution video over there, but I didn't push my button over there. The reason was because of load shedding, I was unable to watch the market through my laptop. I was in my phone. So in my phone, I couldn't see anything over there. But finally, when I have seen that market tap to this breaker block, I was in 15-minute chart, 15-second chart because I'm already late. Okay, so I have to find out a precise entry so that I can join to this run. Market came here around that area, exactly here. Take this liquidity. After taking the liquidity, market structure shift. This swing high is valid for shifting market structure. Shifted, the market has shifted. If you don't want to mark that on, no problem. All of these things, actually, I was forcing the market, to be honest. I was just forcing the market to give me the market structure shift. Though I don't need the market structure shift, but I was really forcing the market to give me the market structure shift. If you want to ask me where was the real market structure shift, that was the market structure shift. This swing high is valid for shifting market structure. It has shifted over there. That was the fair value gap. If I stayed that fair value gap, boom. I didn't participate in this price action as well. I was just confused to see that if market can go a little lower and take these lows or not. Then I got this displacement. I have already shown you the entry from 1 minute chart. You don't need to participate in this price run. But if you are really interested to learn more precision, here it is. After this displacement, when I got another market structure shift, I marked the fair value gap over here. So this is the fair value gap. I took my entry when market was very near to that fair value gap. So when this candle appeared and went little lower, I was in the market. I didn't even wait to tap to this fair value gap. Then market went little higher, come back again, tap to this fair value gap, boom. Market keep going higher, and I actually closed my trade. Just from 15 seconds that I am unable to show you that around this area. Around this area, I just closed my trade. So this week has closed my trade. I participate over there. My entry was here. My stop loss was over there below this candle. And my target was around that area. Now you can, I did it in live. If you are with me in my Twitter, you have already seen this entry. Risk to reward ratio 1:, near about 7. How was that? This is how you should trade, brother. You just can't depend on the setup. If you just depend on the setup, then you will see market has taken all the highs. This is the market structure shift. Fair value gap, you are going to take sell over there. What happened? Market went higher, you will be stopped out. Maybe around that area, you have seen some kind of market structure shift. You will take that buy. Market will went higher, then boom, market went lower. What happened? You take a loss. Here, you didn't get any opportunity to take entry. Market keep going higher. Finally, market reached around that area. You see this market structure shift. Then maybe you took your entry over there. You were thinking that market is going to take that high. Market boom. You got stopped out. That's why you should not depend on setup only. Instead of that, you have to read the story from the very beginning, from the monthly analysis. Every single week, I'm doing the weekly analysis video. Watch those videos, learn it, earn the money. Earn your freedom, brother. This is very nice price action. I told the way it is going to work. It has worked that way. After taking this all-time high, I don't care where market is going actually. I really don't care about that. It has already given what I was expecting from this area. Exactly that area. So that was my entry point from the morning session. I took my entry over there depending on the breaker block. Let me show you that from 1 minute chart. So this is the 1 minute chart. I took my entry over here. Market reached there. Liquidity. market structure sheet, fair value gap. I took my entry to this area. I closed my trade to this last fair value gap because I had just one contract. I told that market is going to take this relatively equal highs. Market has taken that relatively equal highs. I told that when market was over there, don't look for sell, instead of look for buy. And where you will start to look for buy, either from this fair value gap or from this fair value gap until this Friday high. Until that area, you should look for buy. Then the lunch hour, avoid the lunch hour. From 1 minute chart, you got your entry. Boom. You missed that entry. Go to your very lower time frame. If you are confident about your entry, then try to take another close approximately entry. Boom. This is called trading, brother. The way you are trading, it's absolutely wrong. And this was the suspense. If you have already watched until the end of this video, I believe that you won't leave the video without giving me the likes, without giving me thumbs up, and you won't leave my channel if you really would love to be a profitable trader without subscribing. So until the next video, cheers guys.